Hey guys, it's Carter. Welcome back to the team. Hope you guys are all having a great and amazing day today. Now in today's video, we are going to be doing a beginner's guide for swing trading stocks. So I hope you guys all enjoy it. If you guys do, hit that like button, subscribe. If you guys are new to the channel, new to the team, we talk about everything money, stocks, money management, trading, investing. So subscribe, join the team. And if you guys want to check out my brand new swing trading course, I'll put it down below and you guys can use code YouTube to get 20% off. We talk about the mindset. We talk about my strategy. We talk about pretty much everything you must know about swing trading. So I hope you guys all enjoy it. I'll put that down below so you guys can check it out. But overall, here, this is our logo. We have a buffalo. Now, the reason why we have a buffalo, we got a couple of comments about it in the chat room and in the course. And what I wanted to explain to you guys why I chose a buffalo over a variety of other common things like a bull or a bear is because a buffalo, when they see a storm, instead of heading and running away from it, which most animals do, what they do is they run into the storm, knowing it's going to be hard, it's going to take time, but overall they're going to get through it faster than all the other animals that are running away from it. I think swing trading in general is just like that. You have to brace the storm, you have to follow it, and you have to just be patient and have determination and just get through, that major learning curve. But overall, let's dive into it. So like I said, this is going to be a beginner's guide for swing trading. So what is swing trading? Well, in simple terms, swing trading is when you buy a stock, you hold it for more than a day, but less than a year. When you buy and sell a stock during the same trading day, that's considered a day trade. It's a different type of trading style, different strategy, a different mindset. Now, when you buy a stock and you hold it for more than a year, that's considered a long-term investment. It's a different style of investing. It's a different, mindset, all that good stuff. Now, most traders, either day traders or swing traders, they look at something called technical analysis, where investors really look for fundamental analysis. So the difference between those is technical analysis is looking at the charting, looking at studies to determine if a stock's undervalued or overvalued. Now, most investors, they look at the balance sheet, the cash flow, the revenue to determine if a stock's undervalued or overvalued. Now, how do you buy a stock? Well, in simple terms, you need a broker's account. Now, I'm sure you guys have heard of like Robinhood or TD Ameritrade or E-Trade. Now, this is how you buy and sell stock. Now, in order to do this, you do have to sign up. Nowadays, it's all online. Back in the day, how it would work is you'd actually have to call your broker and they would execute the trades. Nowadays, you can do everything right on your phone, which makes it super easy and super convenient because you can hop in the driver's seat and start investing literally within one day, which can be a good thing or a bad thing. Now, personally, I definitely think that, choosing a broker's account, it's kind of like choosing your car. It may be better suited for other people depending on their needs. If you have a family of 6, you're not going to want a sports car. With a broker, it's kind of very similar. Some brokers have things designed for different types of investors, like Robinhood. It's great, but it's designed for just an average investor compared to a site like MooMoo or TD Ameritrade's Think or Swim, which is designed for more of a experienced trader that is looking to trade in and out of the markets. So understanding, what your goals are with your broker's account will definitely cut down on that learning curve. But overall, my main broker that I use is MooMoo. Now, the reason why I love them is because MooMoo allows you to, have an account that offers paper trading. Paper trading is just simulated trading. Now, with swing trading in general, I would highly recommend paper trading for at least 1 year before you even think about putting your hard-earned cash in an account and fund it. And the reason why is because you need to develop a strategy. We're developing a strategy that works well, for you, because the strategy that I have may not work well for you. But overall, the thing is what I did when I developed my strategies, I kind of picked bits and pieces from other people and just overall experience. And that's where you get a lot of value out of paper trading is you develop that experience. So something that you like, you can implement in your strategy. But MooMoo is fantastic. They have good charting, they have scanners, and a cool thing that they offer is something called the AI monitor. So it allows you to have it all pretty much like an active scanner. So if a stock starts moving, you get notified and you can make some trades accordingly. Another cool thing, obviously, like I said, they have paper trading, all the different types of order types. So like limit order, market order, all those, which is great. It makes it really, really convenient to pick the best opportunity. But MooMoo's great. TD Ameritrade's great. There's a lot of good ones, but I just like MooMoo. They're super convenient, and they do have good charting, and you can use it on your phone, which makes it convenient. Now, for those of you that don't know, 90% of swing traders fail. So what do they do that you shouldn't do? Well, starting off, most swing traders don't have a plan. They kind of go into it willy-nilly, just buying and selling different companies, and at the end of the day, you're going to lose money in the long run. The next thing they don't do is risk management. Risk management is by far the biggest thing when it comes with swing trading. And risk management isn't about making money. It's overall about trying to keep your money, using different ratios, understanding your stop loss, understanding your profit, your, entry price. All those are super, super important. Implementing, your risk management. Like I said, it's not about making money, it's about keeping money, and that's super, super important. The next thing is technical analysis. The more you learn, the more you earn. Technical analysis is super, super important. Understanding when to buy, when to sell, things to look for. Looking at this chart right here, you guys will see this was a little trade that I've done in the past is on Disney here. You guys will see it had that nice support right here. Hopping in on these support lines, understanding that technical aspect of Disney, as well as that, that 50 or 90 moving average line right here is also acting as pretty hard support. So understanding that is very, very important, as well as being patient and understanding and emotional control. Swing trading is like 80% emotions and 20% understanding stocks and your strategy. And the reason why is because when you lose money, a very common thing that most swing traders that lose do is say, how do I get this back? And if you're thinking that, you're already in the wrong headspace, and then you're gonna make bad trades. It's not quality, it's quantity, and you don't want that. You always want a high quality pick, even if you swing trade once a week or once a month or once a year. But if that's a quality pick, you're gonna be more successful than somebody that's just burning through trades and is trying to do quality, or is trying to do quantity over quality. So understanding that, very, very important. Emotional control, very, very important. The last thing that, swing traders always need to do is never stop learning. The market changes, so does your strategy. And that's just a little tip that I always do. I always try to go into each trading day, at the end of the day, have a trading journal and understand what I did and what I could improve on. So always practicing, always learning. I still use my paper trading account just to practice different types of trading styles. And it's a great thing, and I would highly recommend it. Now, here's a little example of the strategy that I do. Now, this one here is on Google stock. So you guys will see it does have some resistance right here at about 107 or 105 right here. You guys will see it hit it several times. We just got natural selling pressure. So that is resistance. Now, support, on the other hand, is right near and around, $86. So pretty much what I did is I set an alert here at $86. Once this stock, sold off and hit that price, I hopped in, setting my stop loss below $80. So I'm risking, about $6 to possibly have this come up to resistance at about 105. So I'm risking $6 to make well over $20, which is about a 4-to-1 risk and reward. So I'm understanding my risk, as well as I'm understanding my stop loss, I'm understanding my entry and my profit. All of that helps reduce that risk, helps, understand my risk tolerance, my risk management, and understanding, where I'm buying and where I'm selling is super, super important. So this is just a clear example of understanding support and resistance and the strategy that I absolutely love. So guys, that was just a beginner's guide to swing trading. I hope you guys all enjoyed it. If you guys did, hit that like button, subscribe, and don't forget to check out my course if you guys want to learn more about swing trading. So we'll see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care, guys.